Hey everyone, welcome back to another edition of That's Our Two Satoshis Live. I'm Jeff Dorman, Chief Investment Officer at ARCA, here to discuss, as always, what's going on with the digital asset market, specifically with the investment opportunities within the crypto space. Before I go further, as always, not intended for investment advice. And for those who like to read rather than listen or want more in-depth, as always, I would recommend going to our blog, ar.ca/blog, and read That's Our Two Satoshis, which we write every week and comes out on Monday. But let's talk about what's going on in the market. Obviously, a pretty big bounce back week for digital assets. Not entirely surprising, but a nice move. 7-day gains of anywhere from 10 to, in some cases, 20 to 30% off the lows. We've been spending a lot of time over the last couple of months, actually really dating back to the end of last year, talking about how 2024 was shaping up to maybe look a little bit like 2021. And even last week, I mentioned specifically that the last couple months looked a lot like 2021, where May was incredibly lower in 2021, then followed by June of 2021 even worse, and then the first week of July 2021 was a disaster before ultimately recovering. And actually, July ended up being a pretty positive month, heading into August, September, October, November, and a pretty strong rally. The reason it seemed a little oversold to us was mostly because of all the long-term positive catalysts coming, specifically the Ethereum ETF launch that's going to happen now next week, as well as some of the political changes coming here in Washington, here in the U.S. But what's interesting when you look at what happened preceding the bounce back of last week, you once again had a real divergence between crypto and equities, something that we've been seeing now for most of the year. If you look at a 30-day rolling period now, rolling correlation between digital assets and equities, it's starkly negative. And even if you look at more of a longer period, usually we look at longer periods when we're looking at correlations. If you look at like 6-month rolling, it's still somewhat positive, but trending towards zero. We have a graph in the blog showing that correlations were as high as 40-50%, now back down to like 10%. So another way of saying this is a really uncorrelated asset class and continues to be. But what was probably most interesting to me about last week was you had probably one of the biggest risk-on days ever on Thursday. This was after you had some economic data that clearly showed that inflation is under control with the CPI report. All of a sudden, you had expectations for a rate cut in September go up to 100% probability when looking at futures markets. So a really big risk-on day for the markets, where you had Treasury yields coming in. You had a real rotation in equities. So even though the indices were down on Thursday, it was a huge dispersion in what that meant, right? The indices obviously being market weighted in the equity market, really driven by the Mag 7, which have driven performance all year. Whereas if you look at what actually happened on Thursday, you had a small caps up 4.5% relative to large caps. It's a 6 standard deviation event. It's the second biggest performance on record, trailing only October 10th, 2008. And really, it's just a massive rotation out of call it safety and into more risk on. And to give you some context there, heading into that week, if you had looked at small cap U.S. stocks, they were actually down 2% on the year, while large caps were up 17%. So this is a trend that had been going on all year of large caps outperforming small caps, of sort of a win for the U.S. equity market in terms of market weighted indexes, but a terrible year if you look at more equal weighted indexes or look at more of a broad based measurement of what's actually happening in U.S. equities. So to have that kind of a risk on rally, you would expect crypto to be up, 10, 20% in a week like that. And Bitcoin was down that day. ETH was down. There was just no reaction at all in crypto on Thursday based on what we saw in the equity market. And it's weird because the same thing is true in crypto, right? You had Bitcoin and ETH leading the way this year, maybe a couple of outliers like a BNB or a Telegram. But for the most part, the crypto performance this year has been driven by a handful of tokens only, and most of the small caps have done nothing. So you would expect similar rotation. If Bitcoin and ETH were going to be down on a day like that, you would expect maybe some of the small caps to really be rallying. And it didn't happen. It didn't happen at all until the weekend. And of course, on the weekend, you had the Trump assassination attempt. which further increased the odds of a Republican takeover in November. The odds of Trump winning in November rose to 70% on Polymarket. You still have Trump ready to speak at Bitcoin Nashville conference later this month. So you still have you had a really idiosyncratic reason for crypto to finally rally on Sunday and into Sunday night and into Monday. So if you look at 7-day returns, they look great. But again, it was all driven by this political and presidential turmoil, not at all to do with an overall risk on sentiment. And I thought that's really interesting, again, because you have so much positivity coming into the market right now. And it's just really interesting to see what the crypto market is going to key in on. This is, to me, why it's always been so fascinating as an investor in this space, is that even though you can always point to some short-term correlations in the market, there really is no long-lasting correlation to anything, right? Sometimes it moves with gold, sometimes it moves with equity, sometimes it moves with political turmoil, sometimes it moves completely on its own. Well, you have some real idiosyncratic events coming in crypto, notably now that we have an actual date, July 23rd, a week from today, being the launch of the Ethereum ETF. You wonder if crypto is really going to trade just in its own sort of vacuum on politics and on idiosyncratic events, then I don't know what else any trader or investor would possibly be looking at other than the Ethereum ETF and the November elections, all of which are pointing to a really, really, really positive outcome right now for crypto. So again, surprising to see the way crypto is trading. Happy to see it moving higher. Again, pretty big snapback off the lows. Most indices and tokens are now in starkly positive territory for the month after a pretty rough start to the first week of July. But I still tend to think that the market is really undershooting the impact of these Ethereum ETFs. I really believe, and actually shout out to Bitwise, Matt Hogan, who put out a really nice report himself talking about why the Ethereum ETF will be more impactful than people think. It's worth checking out in the Bitwise CIO memo, because I totally agree with it, which is, Bitcoin shocked the world with how much demand there was in the early days of trading for that ETF. There's now over 16 billion of net inflows into the ETF, which surpassed even the Bloomberg ETF strategists' expectations for the full year. But also, don't forget, Bitcoin has natural supply. There's always supply coming from Bitcoin miners who have to sell to cover their costs. Ethereum doesn't have that. Ethereum, just the way it's naturally set up, with proof of stake rather than proof of work, there just isn't any short-term supply issues with ETH. So you have new demand coming in to something that has constant supply. The amount of ETH outstanding hasn't changed in over a year, because even though there is slight inflation, it gets offset by the usage of the network. So it's really sort of challenging to think of a scenario where even modest inflows into the Ethereum ETF won't heavily outpace what limited supply comes to the market, especially considering you also have 28% of it staked and another 15% of ETH being held on DeFi protocols. You really could see a supply issue here where this new demand is just pulling on a string and there's just nothing to sell. So we're incredibly bullish on this ETF, not just for what it means for Ethereum, but obviously Ethereum being something that touches the entire ecosystem will spill over into other areas of the market, from gaming to NFTs to DeFi to stablecoins, et cetera. So it should be a pretty big week next week. Should be a pretty big couple of months. Definitely encouraged to see the price action that we saw, and more importantly, the parallels to what we saw in 2021. So we'll see if that continues. I encourage everyone to check out the blog, see some of the graphs and charts we had to support the argument, and we'll do it again next week as always. So appreciate you listening, and that's our 2 Satoshis for this week. Take care, everyone.